Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts. Welcome to Market Insights, our weekly commentary about economic and market events and what they might mean for investors moving forward. Let's get started. This week, we are back to the same old backdrop. Because my millennial marketing team felt like a dreary rainy day was the perfect backdrop for talking about a market correction. And that's what we've been living with for the last week and a half or so in financial markets. We've actually seen the first significant pullback since, probably back in March. The market's been on a one-way journey upward for the past 6 months. Why? And when can investors expect to get back on the upward journey? Well, if you remember, a couple of weeks ago, we talked about how the failure to pass a new COVID-19 stimulus package created the conditions for a potential market pullback. At the end of the day, this pullback's pretty easy to understand. The President and Congress could not agree on a new spending package. That means the Fed does not have to finance more deficit spending, and they were able to hit the pause button on their money printing machine. Without trillions of new dollars flowing into financial markets, the conditions were ripe for a pullback. Now, you're going to hear in the financial press about short-term option trades and about how Tesla wasn't put in the S&P 500. And those were definitely the sparks that led to the explosion of this market pullback. But the actual explosive power came from the fact that it's been about 2, almost 3 months since the Fed has printed any money. And the market feels that absence of new liquidity injections coming in. So, what should we expect going forward? Well, as always happens in market pullbacks, it doesn't go down in a straight line. It goes down, bounces, goes down, bounces, and we need to continue to expect that. When does a bounce become a permanent recovery in financial markets? In my opinion, not until you hear the Fed's money printing machine cranking up and new dollar bills getting injected into the market. That probably means we don't get a sustained recovery in the market until we get a new COVID-19 stimulus package. Now, the good news, in my opinion, is that the more the market pulls back, the more likely we are to get that additional stimulus spending. I don't believe that President Trump wants to go into the November elections with the financial markets feeling weak, with the Dow Jones not, instead of making new highs, it's crashing down. That's not where he wants to be on election day. And so the more the market sells off, the more pressure he is likely to put on Senate Republicans to get with the Democrats, strike a compromise, and get a new COVID stimulus bill out there. Now that is a 1-2 positive punch for financial markets. It means the economy gets more stimulus spending. Equity markets are going to like that. It means the Fed has to print the money to finance that spending. That means new liquidity injections into financial markets. That's our signal that this pullback is over and we're ready to get more aggressive in our portfolios. And there's really 2 reasons for us to want that before the election and not after. Before the election, we think, again, President Trump has lots of incentives to get the Senate Republicans to play ball. Also, remember this election could be very close. And it could actually be contested with the mail-in ballots, with the razor-thin margins that we saw in Florida back in the Bush-Gore election. You could see more of that this time. You could see lawsuits that drag out for weeks on end. I don't think we want financial markets to have to endure that kind of political uncertainty without the Fed firmly on our side, printing money, injecting it into markets, supporting those financial markets. If we go into this election with no COVID stimulus, without the Fed money printing machine running, and we get a contested election, well, the volatility we've seen over the last week could just be the first inning of a kind of nasty market pullback. So, for all those reasons, until we see that Fed money printing machine crank up again, we think you need to have a little bit of dry powder and you need to have your chin strap buckled because it could get a little bumpy. Thanks for joining us for Market Insights. We hope you found it informative. If you'd like more of our research, you can subscribe to Market Insights at the link below, and you can check out our website, caravelconcepts.com. Thanks.